Welcome to Proven and Probable. Today we're going to speak with one of the most respected names in the natural resource space, covering over 40 years experience as a geologist and as an investor. You want to stay tuned for today's interview because we're going to cover some of the best value propositions that we see right now in physical precious metals as well as base metals. But before we begin, as always, I invite you to become the next subscriber to Proven and Probable. All you have to do is click the subscribe button and click the bell so you stay up to date on all of our future interviews. And if you like our content, I would appreciate if you give us a thumbs up. Now, on to today's interview. Joining us for a conversation is Mickey Fulp, the world-renowned mercenary geologist. Mr. Fulp, welcome to the show, sir.
Well, first of all, Maurice, thanks for the kind words once again. It's good to be back speaking with you.
It's always a pleasure to have you on the program, sir. Hope that life has been treating you well and that your family is in good health.
Absolutely.
Mickey, the Biden administration has announced the new Green Deal, and speculators are anxious to find out, where do you see the next big opportunity and or opportunities? Let's get your thoughts on precious metals first, beginning with gold.
Well, in my opinion, the Green New Deal or the new Green Deal, whatever you want to call it, it's going to have absolutely no effect either way on gold. This program is absolutely going nowhere other than by executive order in the Biden administration, and most of those executive orders will be challenged in court. Is gold a buying opportunity at these prices? I think it's always smart to buy gold on dips. But from the charts, and I just published on this a couple of weeks, 3 weeks ago, the case can be made that the bull run for gold is over. If you look at the charts from 2010 to 2011 for gold, and 2019 to 2020, 2-year charts, overlay them, normalize them, do whatever you want. We normalized them. They are remarkably similar. So if past is prologue, the case can be made, and bear in mind, I'm not making this case. I'm just saying it's possible that what happened to gold from September of 2011 until basically the end of the first quarter in 2016 looks very similar to what is going on right now. In other words, in that case, what would it be, a 4.5-year period of lower lows and lower highs. If you look at the 6+ month chart of gold since the high was hit on August 6th of 2063 an ounce, it has made lower lows and lower highs since then. Just saying, mate.
All right. Silver has gained a lot of attention at the moment. Do you believe that this is a head fake, or is the attention warranted for silver speculators?
Well, as you're aware, I have no belief. I've spoken about that, and I think you were in the audience when I gave that speech at the Capitalism and Morality seminar. But once again, let's look at the historic charts, and let's take a really broad view here. Silver prices have shown classic speculative cycles over the last 51 years, with 2 major exponential rises, parabolic tops and parabolic falls, and 3 minor occurrences. It looks to me at this stage that we are set for another exponential rise. We've already seen that in to some degree for silver, but if that happens, it will reach a parabolic top and undergo a severe parabolic fall. This is the way markets work, especially small, illiquid, volatile markets like we have in silver, where derivatives, futures, options, spread bets, ETFs have great control over the price of the metal.
Give us your thoughts on the latest moves on SLV and its impact on the price of silver. Is this going to be the catalyst that breaks silver out to new highs?
Well, I'm not sure what it's supposed to break, but when you're attacking SLV, you're attacking an entity that does not. It's a derivative entity. In other words, it supposedly holds silver, but you can't redeem your silver if memory serves from SLV. You can redeem the value of your silver in a currency, but this has to go. Anybody that's going to pull a short squeeze on silver and try to break the bank is coming up against, number one, J.P. Morgan and Goldman Sachs, the biggest banks in the world, and it's two orders of magnitude more problematic to do something like that than it was to run a short squeeze through Reddit on GameStop. So don't think it's going to happen.
Let's discuss my favorite metal and probably your favorite metal, which is platinum, which has quietly had a nice run the past couple of months. What's going on there?
Well, there's lots of things going on, and you're right. It's my favorite metal for 2021. In fact, in the first week of January, I came out and said on a couple of podcasts, in fact, that platinum would be the best performing precious metal in 2021. And that's proven true so far. It's up almost 20% year to date. Gold's down, palladium's down, and silver's had a nominal rise around 3%. This has a lot to do with the idea, once again, that past is prologue, and it has a lot to do with a very depressed platinum price for about the last 4 to 5 years. The fundamentals of platinum are very strong. There will be a deficit in 2021, a significant deficit, because basically a supply disruption. It was in surplus for the last 3 years. It was in a little bit of a deficit in 2020. We started to see the price rise. But much like, and I don't know if he's exactly your boss, but Andy Schectman, who runs Miles Franklin, he and I are in strong agreement that you look at ratios. And if you look at the platinum and gold ratio, it's way out of whack. It's about something on the order of 0.7 right now. Historically, the mean and median are around 1.3. It is on the rise over the last 2 or 3 months. And if you look at the platinum to palladium ratio, it's even more striking. It's currently in the mid 0.5 range, say 0.55, 0.56, but the mean and the median over, once again, 51 years is 3.0. So when we see these sort of skewed markets, they will normalize at some point. So it's pretty easy to call platinum for me very bullish going forward. I can't tell you how long it's going to take, but at some point these ratios will normalize. So that makes platinum a very strong buy, physical platinum, at this juncture, in my opinion.
How about palladium? Do you see it as a buy or a sell?
I don't see any value proposition in palladium at all, especially considering the current price. Number one, it is a precious metal in price only, Maurice. 95% of the platinum demand in the world is industrial, as opposed to about 60% for platinum, 60% for silver, 15% of gold is used for industrial purposes. So, in my opinion, palladium is not a precious metal, and it really almost all the demand is for catalytic converters and catalysts in the petroleum industry. So, and the other thing about it, I mean, you deal in coins for Miles Franklin, and it's not that attractive a metal when you come right down to it, especially when you consider how beautiful a gold kangaroo is, or a gold American eagle. Silver coins are beautiful. You just got to keep them stored properly so they don't tarnish. And arguably, I think the most beautiful coins on the face of the earth are platinum Vienna Philharmonics. So the jewelry, the hoarding, of coins, that market for palladium is minuscule compared to the other three precious metals, and really it's only used for jewelry when the price was low, because poor Chinese people could afford to have a platinum ring, wedding ring made, and so no value proposition at these sorts of prices.
And just to clear up any confusion, Mickey, initially you stated that platinum was 90% industrial usage, but you actually meant to say palladium. So just for any confusion
I'm
there.
sorry.
That's fine.
Yeah.
just for anyone listening.
I'm sorry about that.
It happens to the best of us.
Actually, it's 95% of palladium usage is industrial.
And for audience members that overlook the platinum group elements, allow me to remind you that we called rhodium a buy back at was it July 2017 at 870, and the current price for rhodium is $23,000. That's just I have no words to say to that other than wow.
Nice call, mate. That's what I would say. Now, here's a very good example of a low liquidity, small volume market. It's very hard to buy rhodium compared to other precious metals. For the longest time, you could only buy sponge, rhodium sponge. I think you can buy rhodium bars now, and you can educate me on that. But and once again, rhodium is a very rare element. It's only used industrial, to my knowledge, as a minor component, as a catalyst in various applications, but mainly as catalytic converters for internal combustion engines. But I don't think that you would buy rhodium to hoard it. It is a pure speculation. So you made a very good trade there, and I certainly hope that you've taken profits on this trade.
I certainly have. Never let greed get in the way. And I have to share with you that I feel that platinum has a very similar value proposition. I'd be lying to anyone if I said that I knew that the price of rhodium was going to go to $23,000, but I knew it was on sale. And I feel the same way about platinum right now. I can't forecast a price. That'd be disingenuous, but I believe that platinum is going to go to higher numbers, and that's why I'm a big buyer of that. And in reference to rhodium, they do come in 1 ounce bars. I was purchasing 1 ounce Baird bars, and and just a reminder for anyone listening, I do want to share that I am a licensed representative to buy and sell physical precious metals through Miles Franklin, as Mr. Fulp just referenced. If you wish to have physical delivery of gold, silver, platinum, palladium, and or rhodium, just give me a call at 855-505-1900, or you may email maurice@milesfranklin.com. Switching gears, I'm curious to hear your perspective on what type of impact the Green Deal will have on the often overlooked base metals, beginning with copper. Will copper... No impact other than speculation. This new Green Deal is going nowhere.
Uh, and even if it were implemented, the cost would be ridiculous. The idea that copper is going to be driven by some sort of worldwide green agenda is ludicrous. If you look uh, at the best, most positive projections of electrical vehicle use and electrification, uh, the green agenda could possibly increase by in the next decade the use of copper by about 500,000 tons over a 10-year period. Well, look at the compound average growth rate of copper since 1900 at 3.2% per year. This is a minuscule add-on. We use 25 million tons of copper right now. In a decade, we will use a significant more amount of copper, and I just don't get this. This is promotional. It's promotional by companies that produce copper or hope to produce cobalt or vanadium or lithium or nickel. These are very small add-ons. The copper market is growing. It has been a winner already. That's mainly because of low inventories, supply disruption, with mines shutting down, supply or demand disruptions with the world economy temporarily shutting down. We'll see where it goes from here. And the dearth of major copper projects on the horizon. So copper's going to do well. Copper at $4.04 has gotten way ahead of itself. It is in badly need of a correction. We've already talked a bit about how markets go exponential, reach parabolic tops, and come back down the other side. Copper's well set up to do that right now. I'm not going to say it's not going higher. I hope it goes higher because it helps my copper stocks. But as you can tell, I don't think very highly of the prospects of the Green Deal.
Based on your response, it sounds like you and I are probably in agreement that if we're going to see a move in the base metals, it's going to be organically, just based on the supply and demand fundamentals.
Absolutely, and it goes further than copper. We've seen nickel go up quite a bit. It's $8.62 at market close on Friday. This is driven by steel demand from China. The incremental increase of nickel in lithium ion batteries as nickel sulfate is so small as to be maybe it could account for the entire usage of nickel outside the steel industry, 3 to 4% per year in batteries at all. Nickel is and will continue to be driven by the health of the world's economy and stainless steel demand, especially in China.
How about the other yellow metal, and that is uranium?
Well, it's quite amazing what's been going on right now. There is a oversupply of uranium still. We've seen that with the price decreasing from about $34 a pound in April to $28.50 today. Yet uranium stocks have been on quite a run over the last 2 or 3 months. I have no idea why. Not supply demand fundamental driven. One thing that is encouraging is that the Democratic platform, official platform, which came out last year, mid last year, the For the first time since 1972, it took a positive view of nuclear energy. So certainly, if we are going to, if they, let's say, are going to try to kill the fossil fuel industry in the United States, the only solution for base load electricity is nuclear energy, and we very much saw that come to bear in Texas over the last week. Problem with renewable energy is the sun don't shine for at least 12 hours a day, and the wind don't blow, and not only that, but windmills freeze up. So like Don Quixote, let them go chasing their windmills.
Well, you couldn't have said any better there. Well, and again, it's so often overlooked is that it's intermittent energy sources, as you referenced, and we're just not there right now to really make that transition. I feel maybe in the future, but we'll see.
Well, I think we're agreed we need a mix, and when governments, region, provinces, we've seen the same thing happen in South Australia over the last few years. We saw it happen in California this summer with wildfires and no base load electricity because they've converted to wind and solar so rapidly. So until there's ways to store energy, efficient ways to store energy, wind and solar have to be a minor part of the whole equation. Otherwise, you end up like South Australia, California, or Texas this past week.
Mickey, you have 4 decades of experience. For someone new to the natural resource space, should they procure physical precious metals first or resource stocks?
Well, let me step back and say that there is no reason to conflate the owning of precious metals, especially gold, which serves not as an investment, not as a speculation, but a preservation of wealth and safe haven insurance policy during times of economic difficulty or heaven forbid, collapse. Resource stocks are just pure speculation. You're speculating that whoever you're buying their stock, that they're going to do well, either margin in as a miner and a producer, or pure speculation, often driven by higher metal prices in the junior exploration space. So, it's up to each individual speculator or investor, but personally, I want to always have at least 10% of my net wealth in physical gold in my physical possession.
And just for the record, which physical precious metals are you buying right now? Is it just platinum?
Actually, I haven't bought any platinum. I bought platinum last year at about $800. So
smart move.
It's at $12.66 now. So I'm not really interested in buying any metals on the uptick. Recently, I bought some very fine Australian kangaroos from your buddy Andy at Miles Franklin. So I bought those on a dip of the price this year.
Do you have any resource stocks that you'd like to share with us that have your attention right now?
Sure. One thing I've noticed in copper space that the miners have made a big run, but the advanced explorer developers have lagged behind. So my favorite copper stock is Trilogy Metals, TMQ, on the New York American Exchange and the Toronto Big Board. Hardly trades in Toronto, so you would want to do any trading of that stock in New York. 2 high-grade giant undeveloped copper deposits in Alaska, permitting proceeding on time and financing pending. I really like that stock. I own it, sponsor my website. And then I'll give you one in gold space. As you're aware, my favorite gold province on the planet is Nevada. And I like Allegiant Gold. I own that stock, and once again, it's a sponsor of my website. It's a hybrid prospect generator drilling now at its East Side project in south central Nevada. We are convinced that the resource there is going to be much larger, currently at 1.1 million ounces. Hard to say, but my target level will be around 2 million ounces after all this drilling has been completed. And it's a hybrid prospect generator, so its goal, and it's currently meeting that goal, is to pay for all of its G&A through option payments to projects at joint ventures for exploration by other juniors.
In closing, sir, what keeps you up at night that we don't know about?
That's personal information. I'm not going to tell you that, mate. I'll take the fifth on that, okay?
Yeah, you gave me a hard time last time as well, but I always have to ask.
Well, if you keep asking, I'm going to keep skirting the question, obviously.
All right, last question, sir, and that is, what did I forget to ask?
I have no idea. We covered it all today.
Mickey, for someone listening, where can they find your work?
MercenaryGeologist.com. As I mentioned before, I run a free subscription service, sponsor model. Sign up to get my stock picks and my musings on time delivered to your mailbox. And also via Twitter at Mercenary Geo, very active. You can find out what interests me on a daily basis. And we have 48,900, I didn't say that right, 49,800 Twitter followers. And we've been stable after Twitter started carving about 1,000 off since the first of the year. We stabilized. So I guess I had a few followers that they did not like. Jack the Hack did not like. How's that?
Well, Mr. Fulp, it's always a pleasure to speak with you. Wishing you the absolute best, sir.
Thanks a lot, Maury. It's always my pleasure.
Take care.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.